Hello class. So very important concept we'll be discussing in this session. So financial statement analysis. So here we'll be covering the meaning, the objectives, as well as the procedure or the steps in the analysis of the financial statements. So dear student, in the previous two sessions, we covered the concept of financial statement, the meaning, the various types, its purpose, and the party is covered, or the party is interested in financial statements and the limitations. So this session is focusing on the three areas: the meaning, objectives, and the steps involved in financial statement analysis. So basically analysis is nothing but with respect to financial statement, if you focus. So here broken up of the content of financial statement into many parts here for getting the meaningful information at the maximum. Because when we'll see the balance sheet or maybe the profit and loss account or income statement, so definitely the position we can get, but analysis and interpretation, it's a bit difficult. So that's why analysis is nothing but where you want to split the content of financial statement into many parts here, and we can get a meaningful picture or we can get a meaningful information at the maximum level. After analysis, interpretation is required there. Interpretation means explaining the meaning and significance of the rearranged, or we can say that the modified data of the financial statement. So two parts are very important here. So financial statement analysis is the process of analyzing the company's financial statement for decision making purpose. So definitely here the stakeholders use to understand the overall health of an organization as well as to evaluate the financial performance and the business value. So now what are the uses or objectives of financial statement analysis? The first one is assessment of the past performance and the current position. So there are so many tools are available where we can compare the financial performance. So here the past performance is acting like a benchmark or is a good indicator of future performance here. So the investor or the creditor is interested in the trend of the past sales or expenses, or maybe the net income or cash flows or ROI, and they can have some kind of a prediction on the future performance. So assessment of the past performance we can link to the future performance with the help of the financial statement analysis part. Next, second one is prediction of the net income as well as the growth prospect of the company. So ಇಲ್ಲಿ ಹೇಗಂದ್ರೆ analysis help ಆಗ್ತದೆ ನಮಗೆ ಇಲ್ಲಿ. So we can predict the future earnings of the company. So when we see the share price of the company, so we can make some prediction. So in the future, what kind of a curve or what kind of a mark it can have. So investor also consider the risk of or uncertainty associated with some kind of unexpected things sometimes, but definitely I think the financial statement analysis will generally help the investors to predict the income and earnings as well as the growth prospect of the company in the future. Next, the third one is prediction of the bankruptcy as well as the failure. So it is very important to have a credibility in the market. Nowadays, when you are approaching the banks for a loan, so they definitely go for your CIBIL score, and on the basis of your CIBIL score, nowadays the banks are lending you funds, as well as your performance in the GST also will be taken into consideration. So financial statement analysis is a significant tool in predicting the bankruptcy as well as the failure probability of the business enterprise. So in that case, the investors or maybe the lenders, they will avoid to finance to minimize the losses. So financial statement analysis will help them to see that whether the company is having the credit worthiness. So they see their credit rating. So if the company with the good credit rating, definitely there will be no prediction of failure in the future. So easily they will get fund from the banks. Next, the point is connected here. Loan decisions by the financial institutions and banks. So financial statement analysis is used by the financial institutions or maybe the banks or any other lending agencies to make a sound loan or credit decisions. So in this way, they can make a proper allocation of credit among the different borrowers. So ಇಲ್ಲಿ ನಾವು ಸಹ ಹಾಗೆ ನಾವು ಈಗ ವ್ಯಾಪಾರ ಮಾಡುವಾಗ ನಾವು ಯಾರಿಗಾದ್ರೂ ಒಂದು ಗೂಡ್ಸ್ ಅನ್ನು ಸಾಲಕ್ಕೆ ಕೊಡ್ಬೇಕಂತ ಹೇಳಿದ್ರೆ, so definitely we will look the financial position of that particular customer. So blindly we will not give any credit. So in the same manner, when banks are financing the companies, so definitely they're looking their financial statement, they are going for the analysis of their financial statement, and based on that they will sanction the loan. And to examine the earning capacity as well as the efficiency of various business activities with the help of the income statement they can make here. And here they can measure the managerial efficiency under various business situations. Various business situation means here sometimes economic situations, economic conditions will be varying. Sometimes economic activities are boom, sometimes economic activities are facing some recession trends. So how you managed the situation, and to estimate the performance evaluation of different departments over a period of time, the financial statement analysis are useful here. And to measure the short-term and long-term solvency position. So with the help of the balance sheet, company can make this. And to examine the sources of finance and way of utilizing the available finance. So this can be done with the help of, we can get one fund flow statement. The sources and the application of funds can be made available there. Next, to determine the earning capacity as well as the future prospect of the business concern we can make here. Then to identify the way of utilizing the fixed assets. So how the resources are utilized and the role of fixed assets on maintaining the earning capacity of the business concern we can make here. And to investigate the future potential of business concern and to compare the operational efficiency of the similar concern engaged in the same industry we can make here. So it is called as inter-firm analysis we can make. And ultimately to identify the growth trend of the business organization. So these are the areas the financial statement analysis are using. So these are the objectives or purpose of financial statement analysis we can make. Now the last part here, the steps are involved in the presentation of financial statement analysis. So for any financial professionals, it is important to know how effectively analyze the financial statement of a firm. So the three key areas we should focus here. First one is the structure of financial statements, means how they are preparing their balance sheet and profit and loss account. Second one, the economic characteristics of the industry in which the firm is operating. Because here the Michael Porter 5 force model will come. So to what extent you are having the entry barrier or exit barrier, or the bargaining power of the customer and buyers, and the intensity of the competition in the industry. And last one, the strategies the firm pursues to differentiate itself from its competitors, maybe like differentiation or the leadership. So all these things are very important in the preparation of the financial statement analysis. So these are the various procedures are followed here. First one is the objectives of financial statement analysis is the basis for the selection of the technique of analysis. So the organization should decide the purpose of financial statement analysis. So first, the need identification is very important here. Second one, the extent of the interpretation is also decided to select the right type of the technique of financial statement analysis. Third one, the financial statement are prepared on certain assumptions, the principles or practices. Fourth step is additional information required for the work of interpretation should be collected properly here. And after that, the collected data should be represented in a logical sequence by rearrangement of data. For example, here you will be given a balance sheet. So simply they will give a list of assets and liabilities. But for analysis purpose, we have to rearrange that. ನಾವು ಏನ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ಈಗ ಅಸೆಟ್ ಸೈಡ್ ಅಲ್ಲಿ ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ ಬೇರೆ ಮಾಡಬೇಕು, ನಾನ್ ಕರೆಂಟ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಅನ್ನು ಬೇರೆ ಮಾಡಬೇಕಾಗ್ತದೆ, ಕರೆಂಟ್ ಅಸೆಟ್ ಬೇರೆ ಮಾಡಬೇಕಾಗ್ತದೆ. In the same manner, in the liability side also, shareholders fund we need to bifurcate, and the long term liability we need to bifurcate, the short term liability we need to bifurcate. So rearrangement of the data also very important. Next one, the data should be analyzed for preparing maybe various tools of financial statement analysis will come here, comparative statement or common size or trend percentages and calculation of various ratios. And finally, the general market conditions and economic conditions should be taken into consideration for analyzing as well as for interpretation, and the interpreted data and information should be presented in a suitable report form. So financial statement analysis ಅಲ್ಲಿ ಇಲ್ಲಿ analysis ಮಾತ್ರ ಬರೋದಿಲ್ಲ, along with the analysis, the interpretation of the data is very important. So by observing the results, so you should have the interpretation about the liquidity position, or maybe the solvency position, the long term and short term the company's financial soundness. So all these interpretations are very important here. So these are the main steps or maybe the procedures are followed in the preparation of financial statement analysis. So ultimately we covered in this session the concept of financial statement analysis, so the meaning of analysis as well as the interpretation, the need, objectives we discussed here, and the various steps, or we can say that the procedures are involved in the preparation of financial statement analysis. So ultimately we can say that analysis is nothing but splitting of the content of financial statement into what we can say that smaller component to get the information in a meaningful manner. Interpretation meaning andre explaining the meaning and significance of rearranged or modified data of financial statement. Next, procedural baruvaga the objectives should be first discussed here. So why we are going for financial statement analysis, and next we need to find the suitable technique or tools. After that, the rearrangement of data should come here. Next, the technique of analysis, and finally we need to go for the interpretation in a suitable report. Thank you.